Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. First we're going to look at is Euro against the dollar. A third bearish black crow on Friday, and a continued follow-on lower from the recent bearish harami. The market closed for a second consecutive time under both the medium moving average, currently at 120.42, and the very recent 50% Fibonacci line at 119.75. The price fall was halted by the previously highlighted limited support of the lesser Fibonacci levels at 118.97 and 118.87. We're now not too far away from the congestion support from August through to November last year between the June 2018 high at 118.51 and the 50% Fibonacci line of the June 2020 to January 2021 move at 117.58. Within that congestion, we also now have the gently rising medium moving average, currently at 118.30. Finally, we're now also closer to possible target X in the 118.05 area. That's the target for the action so far in 2021, being a possible halfway hesitation. This question still has a question mark over it still. So far today, a little lower, but gently. Interestingly, we've moved below the limited support of the lesser Fibonacci levels at 118.97 and 118.87, but seem reluctant to test that big congestion below, with its long moving average within. Cable, aka sterling against the US dollar. A second bearish black crow on Friday and a follow-on to the previous session's key reversal down. Additionally, this was also a second consecutive close below the rising combination of the short moving average, currently at 139.42, and the more important middle time, currently 139.39, of the late June, late September 2020 bullish shift pitchfork. We're now in fairly free territory below the middle time, bar a small congestion in a 138.30 to 138.15 area, which is what held up the market on a closing basis on Friday. Beyond this, we have the January congestion between 137.5 and 136.5, within which is the gently rising short stroke medium moving average, currently at 137.41, and the November 2020 to date uptrend, currently at 136.97. This lower congestion was approached on Friday, but the market shied away from testing it. So far today, steady to a little weaker, seemingly still getting caught up in that 138.30, 138.15 congestion. Euro sterling. An indecisive doji cross on Friday. It seems the market was having second thoughts about following on further down from the recent combined immediate countering key reversal down and bearish engulfing pattern, plus breakout from last week's bracket between 86.69 and 86.17, even though we had a second consecutive close below on Friday. We nevertheless still have below target X2 for the second quarter of 2020's head and shoulders top in the 85.15 area, and target X1 for the target of the recent sideways triangle. Let's wait and see on that. So far today, a fresh attempt lower, but limited so far. US dollar against the Indian rupee. A reactionary bullish white soldier on Friday, almost a bull hammer action. The move higher nevertheless punched up through and closed over the partnership of the middle time, currently 72.99, of the early November 2020 to late January 2021 bearish pitchfork, and the short medium moving average, currently at 73.03. Overhead, we have the mainly flatlining medium moving average now, currently at 73.46. So far today, an extensive range, back below the short medium moving average in the middle time, but reverting back higher now to over unchanged, looking like a beginning of a move higher towards that medium moving average. The US dollar against the Brazilian real. Second bullish white soldier on Friday, but not really much of one. It was nevertheless still a follow-on higher to the previous session's immediate countering bullish piercing line pattern. It seems the market is still interested in the old target X overhead in the 556.75 area. Just cautiously this time, I think. US dollar against the Mexican peso. A third bullish white soldier on Friday, and a continued follow-on higher to the recent key reversal up. There's also a second consecutive close up over the upper bull channel line, currently 20.9784 of the recent bull channel. Plus, and an important plus, it was a first close up over the long moving average, currently at 21.1427. Now the last time this was breached on the upside was back in September last year. The next significant overhead level to look for is the 50% Fibonacci line of the July 2017 to April 2020 move at 21.5854. So far today, a lower open, but then a significant further gain higher. We're now testing that 50% Fibonacci line overhead. The next significant resistance beyond that, bar the high in November last year at 21.97, is another 50% Fibonacci line, the one from the big February to April 2020 move at 21.5854. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.